So welcome to the most exciting webinar that you're going to attend today on numbers and financial modeling. I guarantee it, or your money back. Actually, I'm just kidding. I'm not giving anyone money back. All right, so let me dive right in to Financial Modeling 101 for sales reps. So what am I hoping that we're going to accomplish today? Let's start there. So I guess besides these are more the learning objectives. What I really hope you accomplish is that you walk away with a deeper understanding of financial modeling and how to build financial models and how to use these financial models in your sales efforts, and how to use them to become more strategically engaged with your customers and ultimately to win more deals. So that's what I think all of us are probably here for. And that would be the overarching goal with all of this. Now, that said, there are three main things that I want to try to accomplish today, and they're listed here on the screen. So at least I think they should be, yes. So the first is, what do your customers, CxOs and finance executives, the big kahunas of financial approvals, what do they look for and need in financial models? And what are the types of financial models that you need to be able to help build to support that? The second thing is how to actually build these financial models. What's the structure? What's the layout? What are the common things that should be included? What are some less common things that should be included? And then third is, how do you use and present these financial models and leverage them, not just with your customers, but also internally and with business partners? So we're going to talk through all three of those areas in the next 45 minutes. As a bonus, let me exit out of here. As a bonus today, I'm also going to be pointing out as we go through this 5 common financial modeling mistakes that I run into frequently with sales reps and sales leaders. So I'll be pointing those things out. And if you have questions as we go along, feel free to put them in the chat, and I will try to address them during the webinar. If I can't, I will send out all the questions with my responses and answers to everyone who's registered here. So let's see. And I guess I'm sure there are some people on here who I know, and there are probably some folks on here who I don't know. So before we dive in, I'll just give a little bit of background about myself, who I am, and so forth. And first of all, it really is awesome that anyone is attending this and taking the time out in the middle of a workday to do this. It says that you really want to improve yourself, learn more, and get better, which is huge. I know that you've got a million other things to do. I've been in your shoes before, so clearly taking the time to do this, I genuinely, sincerely appreciate it. It's also one of the things I look for in people that I work with. And so, what do I do? So in the words of Liam Neeson in the movie Taken, I have a very particular set of skills I've acquired over a very long career. But then instead of me going out and killing a bunch of people, I help sales reps win more big deals, especially, and earn more. And I've worked with a lot of really good sales reps, ones that were, hitting their OTE and so forth, and doing pretty well. And I've been successful in helping move them up and increase their win rate, oftentimes doubling their win rate, which has a really big impact on earnings. So a lot of these folks have gone on to earn $500,000, $600,000, $700,000 a year consistently, with probably about half a dozen that have gone on to earn over $1 million a year. So, and this is in tech sales, so it is possible. But those reps were not receiving the specific type of one-on-one, business case centric, deal specific coaching that I really, that's what I do from their employer. And it's not a knock on the employer. I've been a sales manager and director and VP. You're pulled in a lot of different directions. There's a time issue there, and then there's also a skill set issue. So to me, it's really important to work with people who want to improve and get better. It does take a commitment to do this. It's kind of like exercise, right? You aren't going to get results overnight. It takes a little bit of commitment to to get these 6-pack abs. I'm totally kidding there. That's why I'm wearing a shirt. But that's a really important part of this. And today, this is a 45-minute 101 financial modeling overview. My goal is to get you as far up the learning curve as quickly as possible. But if you're committed and you really want to accelerate your results, deepen your knowledge in this area, and see results and impacts very quickly, the fastest and best way to do that is by working directly with me. So if you're interested in that, let me know and I'll set up a time for us to talk and I can explain more about how that works. So enough about me. I know I'm so self-centered, but let's bounce into the first area here. So there are a lot of different types of financial models and financial reporting. The goal is not to turn you into finance experts or accounting experts or anything like that. Not at all. The specific type of financial modeling that you need to know, that your sales or your customers need, and you also need to know, is that helps justify and financially explain what it is that you're proposing. And from the customer's perspective, they need financial models that financially explain and justify potential purchases. So it's really two sides of the same coin. And who are we talking about when we're talking about this type of financial modeling? Who's the audience or the target? It's not as much the person that you might directly be interfacing with your champion or line of business. It will help influence those folks, but a little more indirectly. We'll get into that in a second. The financial modeling itself is really targeted at those CxO level folks, finance organizations, potentially board members. And why is that important? Because deals that exceed a certain dollar threshold are going to finance organizations, executive committees for approval. And the threshold varies, but it's in the recent years, it's decreased and finance is getting involved in deals much smaller than they used to. So $250,000, $500,000 is where you usually see finance and CFOs getting involved at this point. And over $1 million, there's definitely some executive committee that's involved in approving these things. I've worked with Fortune 100 and 200 companies. So this is happening at those size companies. So smaller companies, the threshold may be even lower. And those approvers need financial models and they need full business cases, written business justifications. It's not optional, it's required. So you could be engaged in that process and help your customers with this or not be. And if you are engaged in that process, that's why we see such an increase in the win rates on these deals. Is this type of financial modeling, like, is it subjective, like what should go in it or whatever? Not really. And that's good news. If you think about it, the way that finance organizations executives look at financial information in general, just think about like an annual report or a 10K report for many of your customers. The balance sheet, the income statement, those are all going to be very structured the same way. It's not like one company says, well, I'm going to write my income statement this way, completely different. No, they write them pretty much the same way. There's a format and a structure to it. And this is very similar to that. The good news is once you learn how to do this, it's a very repeatable process. And if you're selling in a particular vertical, great. But if you're selling across a bunch of verticals, it really doesn't matter the industry, the company size. This is a consistent process across regardless. So that's really good. And there are two types of financial models that you really need to be able to understand and help build. One is the current state financial model, also known as a business as usual or BAU model. And that is what is currently in place or what is most likely to happen over the next 3 to 5 years annually in like 1 year chunks. Okay. And then the second is a proposed financial model, which is alternatives to that current state model, also shown yearly over 3 to 5 years. So at a real high level, those are the two types of financial models that you need to have an understanding of how to build. And I just realized I didn't share my screen there. But anyway, so the first of the 5 mistakes that I run into commonly with sales reps is not building financial models at all. So they will, provide a quote or a statement of work. And if your idea of a financial model is, your name and a price and a hopeful emoji, that isn't going to provide what your CxOs or finance organizations need. And while a single financial model is great, let's say your proposed financial model, so you take your quote and you turn it into a proposed financial model. That by itself is 1,000 times better than just a point in time price that you give them or quote or statement of work. But the real value in financial modeling comes when you compare one model against another model, such as the current state versus the proposed. And that's what your CxOs are going to do when they're evaluating any large purchase. The second big mistake that I run into frequently is sales reps not building the current state financial model or not presenting it to their customer. And unfortunately, it's 100% required by your customers' CxO approvers and finance organizations. So if you don't build it or help build it, your customer is building it. And then the problem is you don't really have any insight or visibility into what it looks like or how what you're proposing compares against it. So there's a couple of reasons there where you want to make sure you're involved in that. The thing I've also run into is sales reps who are afraid to build the current state financial model or to show it because they're worried that it'll be more than what the customer is currently doing. It's going to make their proposal look bad. And I would say that's silly because your customer, like I said, it's not optional. They're going to figure that out anyway, and they're going to, figure this out. It's kind of like, I bought an inflatable hot tub on Amazon, and expecting my wife not to realize that I had done that was kind of silly, right? It's going to show up. I'm going to blow it up and stick it on the deck and fill it up and soak in it. But it's kind of the same thing. They're going to figure this out. It's better that you figure it out, and then you can take steps potentially to figure out how you're going to mark your message and position things. All right. So speaking of inflatable hot tubs, let's talk about how to actually build these financial models. So each financial model is really going to have three main sections to it. You're going to have headers, which you can think of as like the columns. And these are very consistent. Once you know how to do it, it's pretty rinse and repeat. You're going to have what the description is of the expense. You're going to have in one column, you're going to have assumptions or notes. You're going to have those 3 to 5 years, 2025, 26, 27, 28, for example. And then at the end, you're going to have a total. That's the header. Then you're going to have expense details as the rows. And that's going to contain the detailed description of the expense, any notes or assumptions associated with that, the dollar amounts for that, and a total. And you could have multiple rows of different types of expenses and so forth. And then finally, you'll have totals at the bottom that's going to show total by year and then a grand total. At the most simplistic level, that's what type of financial model you need to be able to construct, whether it's a business as usual or current state or a proposed. And there are 5 really common types of categories of expenses that you use to construct financial models. So the first is purchased expenses, purchased items, things that you buy outright, like a really good bottle of bourbon. No, but things like oftentimes capitalized items like hardware, servers, or things like that that are depreciated, or professional services, another good one. Consulting services may be purchased outright. That's one. The second thing is financed expenses. So things like leases or other forms of financing. The third is subscription or as a service type expenses. So my Hulu subscription, your AWS subscription, Office 365. I'm sure that most of you that are on this sell items that are SaaS or subscription-based services or solutions, since the world has really shifted that direction. Support and maintenance is the fourth category of expense. And then the fifth is personnel, which personnel can include not just like customer employees, it can include contractors or managed services, outsourcing. So those types of things. So those are like the 5 main categories of expenses. So I'm in Sheets right now, and you can use Excel to do this. We'll talk about different tools that you can use to build these financial models. That's coming up in a second. But let's go and talk through a real simple example. I think it'll help crystallize everything. Again, at the most basic level, we've got our header, we've got some expenses in a total. And I pre-filled this out so that you didn't have to sit here and watch me type. But so your header, and you can see I put current state is what type of financial model are we building? All right, this one's going to be the current state. We have our expense description, we have our notes, some years, and then the total. And if we then fill that in with the details, so this customer has a Dell PowerMax 8000 already, and they already own it, and they're paying maintenance on it. And so that's what we're seeing here in this maintenance renewal. Maintenance renewal, the notes are assumptions. How much capacity is it? It's 800 terabytes. You could also put things in there like, it was acquired or, in 2020 or whatever. This 250, 300, 350, 400 is showing an increase in the cost of that per year. And showing increases in growth, or decreases in growth, is especially important in financial modeling. We'll hit that in a second, why that's so important. But and then the next row in here is an upgrade. So in this scenario, the customer needs additional capacity. So they need another 200 terabytes with 3 years of maintenance, and they are buying that and that's going to be they're buying 3 years of prepaid maintenance, and that's $650,000 for the upgrade and the maintenance. And then with 3 years, if they buy it in 2025, that means they're going to need a renewal of the maintenance in 2028, and that's what that $100,000 is for in the third row. If we total each of the years, you can see how this kind of looks across each year. $900,000 in 2025, $300,000 in 2026, $350,000, $500,000, and you have a total of $2,050,000. Boom. Most simplistically, this is a good financial model, a good starting point here. The third big mistake that I run into a lot is not including the right elements in the financial model. And there are a lot of potential things that you could include. And growth is one of the big ones that you want to make sure you're reflecting that. And growth both in usage or consumption, as well as changes. I should say changes, growth positive or negative in usage or consumption, as well as increases or decreases in the cost or price of things going forward. And that gets into the fourth problem that I run into a lot, which is a lot of sales reps are very uncomfortable making assumptions or estimates. And the problem is any type of financial modeling, the financial modeling that your customers' finance organizations make have a tremendous amount of assumptions and estimates built in. They're very comfortable with that. Sales reps tend to get hung up on that because it's not black and white. I think they don't want to look foolish in some cases, but you really need to incorporate estimates or assumptions into your financial models. Otherwise, they're going to be woefully inaccurate. Things like excluding growth is a big mistake. And the other thing is, we'll get into this in a minute, but done correctly and positioned with your customers correctly, your customers will help you refine this. So let's build out the proposed financial model next. So, wait, that was a trick. So that's actually the fifth big financial modeling mistake that I run into. After you've built the current state, the next step before you build the proposed financial models, before you certainly present anything to your customer, should be validating this with your customer. It's a hugely important step. Why? There's multiple reasons why this is really critically important. First, if you validate this current state financial model along with just the narrative current state and the challenges, the problems the customer has, it's going to make you look very consultative and very focused on just them. You're not positioning anything at this point. And what most of your customers are not experts on financial modeling or business cases either. So they will generally be receptive and appreciate the fact that you're trying to help them with this. And then the second reason why this is important is that presenting this current state financial model, even if you've got a zillion assumptions in here, typically results in customers opening up a lot more than they normally would, especially compared to, like, for example, if you're selling something other than these PowerMaxes, and you ask the customer, hey, what are you paying for maintenance on your existing PowerMaxes? They may or may not tell you. Most of them probably aren't going to tell you that, right? But if you share this with them, you'd be surprised at how they'll start to have a little bit of ownership in this, or they'll feel they will, because this is their stuff, and they will give you guidance often on, okay, yeah, that's a little bit off. Versus if you just point blank ask them without sharing anything, they're very reluctant to sharing this. You'd be shocked at how much information customers will share when you've opened the door and opened the kimono a little bit like this. And then The third reason why it's important to validate this thing before you do anything else is having this accurate current state gives you visibility into how your customers are going to compare whatever it is you're proposing against. So this gives you visibility before you've presented anything as to how your customer is actually going to look at what you're proposing. So let's go ahead. I'll go and show the proposed next. And we'll talk through this real quick. So I think we have some folks from Pure on here. So we have an X90 storage array we're proposing. It's going to have 1 petabyte. It's going to be $1 million all in 2025. We have 3 years of invoice it yearly. So it would be 200,000, 200,000, 200,000. And then there's a maintenance renewal in 2028 for 200,000. And so you can see there's one other thing that we have down here, which is the difference in dollars and the difference in percentage between these financial models. So real quick, just looking at these, we can see, okay, our proposed is $300,000 more than the current state in year one. Could be a problem, right? 33% more. But then in 2026, 27, 28, it's a lot less. And blended out over the full time horizon, it's $250,000 less, it's 12% less. That's pretty good, right? But now that we know this, maybe there are steps we can take to make that $1 million in year one less impactful. Maybe we could do installment payment agreement and spread it across 2 years. There's an infinite number of things that you can do at this point, but at least you have visibility to it. And so this is really the very, very basics of what your financial model needs to contain and what it needs to look like. And another point, don't worry about this being perfect. That's another issue I sometimes run into. The financial model may not be perfect. This is much, much better than just providing a quote or a statement of work. And as you work with your customer on it, they will help you refine this and the quality will improve. So don't worry about perfection. And to that point, there's a number of additional things that should be or could be included in here in these financial models, which we just don't have time to go into today. So one of those is separating out capital and operating expenses. That's something most customers care about. So showing what's CapEx, what's OpEx, and having totals broken out by that is important, as is showing cash flow view impact versus accounting. What we're showing here is more cash flow impact. The accounting view might look slightly differently. And then also net present value, showing that is another thing that the accountants especially are going to want to see. But at a basic level, this is a pretty good start. So we built this out in Google Sheets, and there are, you can use Excel or Google Sheets to build these things out. There are some, well, that's the most common method for building these types of things. There are some drawbacks to it. One of those is that it's time consuming. Even if you have a template built out, it's time consuming and it's very error prone, human error prone. And the other big problem is it doesn't really give you any guidance about what these expense categories should be in the first place. You basically just have an Excel spreadsheet. So, and I guess another related issue is Excel by itself. This is great for a financial model, but that's only one part of a business case too. So remember what I said earlier, your CxOs and approvers actually need a business justification, business case that includes some other sections besides just the financial models. So what are some other tools you can use? A really good one nowadays that can help a lot is AI, ChatGPT, and especially about giving you better ideas about what should go into these expense categories for the specific scope of what you're selling. And I kind of glossed over that before, but how do you even begin to understand what should go in here in the first place? It's really walking into a customer opportunity. You generally, even if you have a wide range of potential solution offerings, you generally have some idea of what you're going and targeting in the first place. And then, you'll figure that out pretty quickly. So what to include in here are the things that have a direct impact on that solution area. So clearly you're not going to include things that don't have an impact on the, that your solution is going to impact. So the challenge is, if you haven't done this before, well, what are those things? What should we be including? That's where AI can actually help quite a bit. And I built a set of ChatGPT prompts that I kind of packaged up. I call it the AI Kickstarter. And I will send that out. You'll get that in an email, a follow-up email from this. And that helps specifically with understanding what should go into these. It's a great starting point, and gives you some of that structure and guidance around what should go in. And then there's a third, like, purpose-built tools. My company, Scandera, built a platform called K2 that is purpose-built for building financial models and full business cases. And I'll send a link also in the follow-up email. If you're interested in more information about that, I would encourage you to go look at that. And K2 also builds the whole presentation package, like the actual documentation for a business case. So it's pretty cool. All right. Third topic: how do you use and present these financial models? Let me go kill that real quick. And leverage them with not only your customers, but internally. So we already hit the one point here, which is the first step with these is presenting and validating that current state financial model. I've already mentioned it. I can't overemphasize that enough. It's super important. And ideally, you're including the current state summary, the narrative summary, and the challenges, as well as that current state financial model. So you're talking through, here's what you currently have as we understand it. In this example, you've got these Power Maxes and you bought them in 2020, let's say, and they have 800 terabytes, and you have a need for an additional 200 terabytes. And, the performance is okay, the reliability is this, just talking through kind of some of that factual information, and then some of the challenges. Like in this case, a challenge might be, they have escalating maintenance renewal costs, right? And they're out of capacity and they need to buy more capacity. And so having those things all kind of packaged up and validating that with the customer is the first key step in how you work with this and how you present it. And what that's going to do ideally is get this co-collaboration going, because again, what I just described has nothing to do with what you're pitching or presenting or proposing. This is all about your customer, and it's almost like a consulting deliverable. In fact, it kind of is. So, we always say, or a lot of sales leadership says, well, be more consultative with your customers. How do you do that? Well, this is one great way to do it, is take this information and sit down with your customer, and you'd be stunned at how much interest they'll have in this, because it's all about them. There's nothing in here about, our company and our logo, or, NASCAR logo slide and, all the other marketing fluff. This is all about them. So that's step number one. Something to consider at this point is, and discuss with your customer, is whether or not there should be more than one current state financial model, not just refining the one, but should there be multiple current state financial models? And you might be like, well, why would I want to do that? And there's a couple reasons. One, we're making estimates and assumptions. One reason is if you want to show, okay, well, maybe there's what we kind of expect to happen, but maybe here's a more optimistic growth trajectory, and maybe here's one that's more conservative, and you build those out. Another reason why you might have multiple current state models is if you have a 3-year option, a 4-year option, or a 5-year option, and you want to compare against, 3 different years. So that's something to think about, is would it help or to illustrate things if I had more than one current state financial model? So keep that in mind. You don't necessarily just have to have one current state financial model. You can have more than one. Let's see. After you build out that current state financial model, then you should build out your proposed financial models and compare it against the current state, and use that to optimize whatever it is you're proposing before you go back to the customer. That's really what you want to do. Step one, validate it, get the customer's agreement that the current state looks solid. Then take your proposed, and compare that, build the financial model for that, and compare it against the current state and see how it looks. And are there things that you can do to maybe make it look better? Because now you're going to have an idea of how the customers' approvers are going to look at this. And another requirement that your customers have for large purchases is that they have to have 3 options typically, especially if you're over $1 million. And it can even be more than 3 options. And this is something that I've run into with sales leadership in a lot of companies where they're reluctant to propose more than one option because they're for fear of confusing the customer. But the problem is, in most cases, the customer has a requirement for this. And if you're not providing alternate options, then you're kind of forcing your customer to have to go out and get additional options. And that could be from your competitors, which isn't really good. So proactively providing options is something that you should try to do. And you can use that current state model again to compare these proposed options against. And you can make a more conservative proposed option, smaller scope, fewer sites, fewer users, whatever, or larger. There's an infinite number of things you can do here, but the key thing is making sure that you've got more than just one option that you're proposing. And yeah, and again, the financial models themselves are a great way to help you come up with what those options should be and what they're going to look like. All right, let's see. Oh, here's another key point. So a really creative way to use financial models with existing customers is, outside of the deal that you're working on, is to proactively build financial models when there's no deal. Maybe you sold something a year or two ago, is to build financial models proactively that show the customer how what they purchased is financially helping, quantifying how that's actually helping them relative to what they had previously, what the expectations were at the time of the purchase, and just reinforcing that. And so I know a lot of times, it'll come time for renewal. You've sold something, it's 3 years later, it's time for renewal. And, the customer will be like, well, what's the value that I'm getting from this? And you can proactively help them, and they will appreciate this if you can, along the way, use these financial models to help show the value that they're getting from this. And you can build financial models that would show maybe in year 1 or 2, okay, this is what it compared against you doing this yourself or against a competitor, and this is what it would look like if you were to do this yourself or against a competitor now. So that's another creative way to use these financial models that a lot of people don't think about. Okay, aside from the customer, another really important use of these financial models is internally with your own finance and executive leadership. So especially these bigger deals, a lot of times there are, you may be asking for special pricing or discounting, special terms. There could be a whole range of things. Or just based on the deal size, your leadership may want to know some details about the deal. They might want to have a deal review. And these financial models can help tremendously with that. And especially if you are asking for additional discounting or some unusual terms or things like that, this can help you more objectively explain why you're asking for those, other than I just need some extraordinary discount just for the heck of it, right? So it'll help you have a more constructive conversation with your own finance organization. And you can use that also. Well, you can build financial models for internal use that contain some things that you wouldn't have with your customers too. You can take the customer ones and you could tweak them to show things like costs or margins or things that internally your leadership may care about too. So there's, you can customize those internal financial models a little bit with that. This also applies to business partners. So if you are a partner reseller selling an OEM solution, and you are asking for potentially a lower transfer price or transfer cost from the OEM, the financial models can help explain why that's necessary versus just saying, hey, I need a lower price. And, another question is, I know some people have, is what if you're an OEM and you're selling through resellers or partners? How do you navigate this with them? And I think there's simplistically, there's two ways to answer that question. One is it's really dependent on the type of partner. There are partners that are much more transactional. They just have contracts and paper at a customer, and they really, they want to get their 5 or 10 points of margin. And other than that, they really don't want to be too involved. In that case, I would keep them in the loop, but you can just take whatever the points are that they are looking for, build that into your financial models, deal directly with the customer. The other type of partner are partners who actually do understand this, this type of selling. And those are ones that you can collaborate more with and get their involvement and creativity and so forth. So it just depends what type of partner it is that you're working with. Let's see. I know we're just about out of time. There's a couple things I want to wrap up. So those are really some of the important things to consider when you're presenting these financial models, and leveraging them both with customers and internally and with business partners. And I know everybody wants to dive into more nitty-gritty. Believe me, I could talk about this for hours. I love this stuff, but we're out of time. So let me recap what we covered today. What do your CxOs and need and want in these financial models? And what are the types that you need to be able to build or help them build? So the two main types are the current state, business as usual financial model, and the proposed. If you don't build these or help your customer build them, they are building them themselves. And then the consequence is you have no visibility to it, and you don't know how what you're proposing is going to look compared against that. So that's the importance of having these, and they're equally important. There are 3 key sections to a financial model. You've got your headers, which are your columns. You got your expense details, the rows, and you've got totals. And then the other key thing is showing the difference in dollars and percentages between two financial models. And most commonly, it'll be current state versus proposed. But the other thing is comparing proposed against proposed, right? You might have option 1, option 2. How do those compare? There's an infinite number of things you can do once you have these things built. There's a number of different tools that you can use for building financial models. Excel and Google Sheets, very common. There are some drawbacks to using that, human error and time consuming being the big ones, but also it doesn't really provide any guidance. AI, ChatGPT can actually be really helpful in this area, providing some of that guidance. That K2 platform that I mentioned is pretty awesome. So I'll send the links for more information for both of those. Check them out. And the AI Kickstarter is free. It's completely free. There's a paid version that does a lot more, but try the AI Kickstarter. I think you'll get a lot out of that. All right. And then presenting financial models. So key thing, validate that current state with your customer prior to investing time building out proposed solutions and presenting proposed solutions. Because after you've done that, the other problem I didn't really hit too much is after you've presented that, and we all know this, it's hard to go back and undo that, right? So after you've shown your customer pricing, if you realize at that point, oh crap, I need to change something here, it's difficult to do it in a lot of cases. So that's another big reason why you want to do this step first. Your CxOs and approvers need 3 options for large purchases. Use the current state financial model and your proposed financial models to architect those things and make sure that they, that you're presenting those 3 options. And, at that point, then you have control over how those look and how you're presenting them. And there's no surprises and so forth. And then make sure, using the financial models internally is, I wouldn't say it's quite as impactful or powerful it is with customers, but it is important. In a lot of cases, these larger deals, executives are involved, and having this helps you have more productive, constructive conversations. So I think that is really it. Huge thanks again for attending today. I hope it was helpful. I am curious what you thought about today. I'm going to, hang on. I'm going to put a little thing here. If you could entertain me, and let me do a quick poll here. All right. If you could just answer this real quick. Would you like another session on this that dives deeper into more specifics around some of the things we couldn't get to today, like OpEx and CapEx split out, some of the expense categories, go into more detail on that. So, okay, we're getting some feedback. All right. That's good. All right, that's good feedback. I will look at doing a session that dives a little bit deeper. Check your emails. There's going to be a link to that free AI ChatGPT AI Kickstarter that I mentioned, and the K2 platform. And as I mentioned, if you're interested, first of all, if you're seriously interested in improving your skills in this area, I'd love to work with you. The coaching that I provide is not generic. It's not like what we went through today. It's hyper specific to you, your company, your opportunities. That's how I'm able to help get results really, really quickly. You get pretty much immediate impacts. And I found that working through your deals is the fastest way to help people get up the learning curve too. So if you're interested in that, let me know. I'll set up a time to talk with you about that, about what that's like, and how to get started. And that's it. Thanks again for attending. Have a great rest of the day, and I hope that you all have vivid dreams about financial modeling tonight. So hope to see you soon.